Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast for January 16th, going into the 19th. We're going to start off with natural gas. A maintained gap higher in natural gas on Monday will leave a minor bullish reversal below. We've been bearish overall from $8.20.8. And more recently, I warned on 12.5 that this went out warning of pressure. We've come off $2.28.3 from the 528.90 close. A number of other bearish calls in here. We had broken below a major formation and back above it at 312.20 and then failed back below it again here on the day, which resumes bearishness. We did hold macro exhaustion. I didn't have this written down the other day, but we did hold macro exhaustion at 304 to 298.20 and bounced out of that, but now we've reapproached it again here. Again, it's kind of difficult with these lines because they are drawn on a continuation chart across multiple contracts, across multiple years, so it's hard to get it perfectly exact, but nonetheless, I still think here this is bearish, and if we start breaking down below these levels, this could really come off. Okay, and the crude oil, we traded up into the gap a little bit and rejected out of it. We held exhaustion, but I'm not going to go over the higher time frame stuff. We held exhaustion below at 54.89 and rallied $7.49. A number of other bullish calls in here. Those are all on hold. Trade back below 61.06 has brought in $2.30 of pressure. A maintained gap higher on Monday would leave a minor bullish reversal below. I would note that the heating oil turned bullish today, came off near the end of the day, and went out near the lows of the day. So we'll have to see how that opens on Monday. I would note, though, that we did leave a minor bullish reversal below on the day. Even though it's a minor bullish reversal below, which is bullish, the day itself warns pressure before/if resuming higher trade. So probably going to trade down in here in the gap. If we leave a maintained gap lower on Monday, then that will leave a minor bearish reversal above. Monday also has a good likelihood of seeing range expansion. Bear with me just a second. And I wasn't even thinking of it, but Monday's actually Martin Luther King Day, so it's an exchange holiday. So we're really talking about Tuesday here. So there would be no analysis on Monday. Okay, crude oil. The RBOB traded up into the gap and rejected out of it here. I'm not going to go over all the higher time frame stuff. On a short-term basis, though, we held exhaustion at 169.78 and bounced 17.45 cents. I warned if this is the beginning of a bullish correction, it should exceed 20.3 from the 169.78 low, i.e. a minimum target of 190.10. Obviously, this was a different sentence because of our last contract, but we rolled now in the March contract. A number of other bullish calls in here. Those are all on hold. We held exhaustion at 187.30 with a 187.23 high and rolled over 8.23 cents down into here. The maintained gap higher on Tuesday will leave a minor bullish reversal below. The heating oil, like I said, left a minor bullish reversal below on the day. We held exhaustion low at 204.69 and rallied 24.7 cents to the upside. A number of other bullish calls in here. Like I said in here, maintain cap higher, leave a minor bullish reversal below. Did go out on the lows of the days, which warns, even though we have a bullish reversal below, like I said, we'll probably come off a little bit before / if resuming higher trade. But if we leave a maintain gap lower on Tuesday, that'll leave a minor bearish reversal above, and then this would warn of market would come off. Also, this line right here, if we fail back below this decently, that's going to warn a decent pressure. That's going to come at 223.01 plus 11 per hour starting at 6 o'clock p.m. Sunday night. The decent penetration in there is going to be 169 ticks until Tuesday's open. Thereafter, it'll be 151 ticks. Tuesday also has a good likelihood of seeing range expansion. And in the Brent, we left the maintain gap higher on the day, but we did not take out 65.61. So this bullish reversal does not have as much veracity. Monday has a good Tuesday has a good likelihood of seeing range expansion. Actually, it would be Monday because it's not a exchange holiday there, but trade about 59.69, brought in $7.13 of strength. A number of other bullish calls in here. Those are all on hold. The failure back below 65.76 had brought in $2.49. So the pressure warned about below, that was the failure below this line right here, down into here. And in the gas oil, we left the maintain gap higher on the day, which I also warned of. Leave a minor bullish reversal below. We held exhaustion with the 59.60, 596.25 low. We rallied $76. A number of other bullish calls in here. Those were all on hold. Now those are off hold. I said we were likely in a bearish correction against a move up from 596.25. If we were to fail back down through this formation down here, that's going to warrant decent pressure. That's going to come in at 639.95 plus 10 per hour starting at 6 o'clock p.m. Sunday. And similar to heating oil, even though we left a minor bullish reversal below, on the day itself, it warrants a pressure before / if resuming higher trade, likely down into the gap here. The gap is between 648.75 and 645.50. If we leave a maintain gap lower on Tuesday or Monday, that will leave a minor bearish reversal above. And your cadence going into Tuesday is the heating oil is the strongest, the crude oil in the middle, and the RBOB the weakest of the three relative to one another. If the heat crack leaves a maintain gap lower on Tuesday, that'll leave a minor bearish reversal above. Okay, I hope you have an awesome 3-day weekend for those of you in the United States. And for those of you in Europe, the analysis will resume on Tuesday. So have a great weekend.